If you're looking at building a property portfolio from scratch, I'm going to show you exactly what you need to be doing in the next couple of months so you can be best prepared to take advantage of building a scalable portfolio. If you guys are interested, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, credibility check, I actually run one of the fastest growing buyers agencies and I employ almost 50 full-time staff. So when it comes to property, we are involved 24/7. We're purchasing anywhere between 20 and 25 properties every single week. And the reason I tell you that up front is because I know exactly what you need to be doing in order to start from zero and actually scale your way up into a portfolio that gives you the ability to retire early or retire on your own terms. And this is the most important thing. If you're starting early, then you're probably going to end up retiring a lot earlier than most will. But not all is lost. If you've purchased a dud property or you've only purchased your own home and you don't have investment properties, this is the sort of stuff I specialize in. Is how do we go from one property to 5 properties or to go from 0 all the way up to 10, 15 properties. So if you guys need a hand with that at all, then definitely contact us, searchproperty.com.au, that's where you'll find us. Now, let's jump into the 4 key pillars that you need before you start looking for property. I know it's so easy to just say right now, I can jump online and say, I can find a property online, that's the one I'm going for. Before we do that, and I know you're excited, before we jump into that, there's 4 things we need. Number 1 is how much of a deposit do you actually need? There are so many things out there in the media suggesting you need to wait 10 years before you have a deposit to buy a house. Things are terrible. And they base that on such old policies. And to be honest, I'm still so surprised when people call us and say, hey, I'm actually still further away from my 20% deposit. I'm probably closer to about 15%. The reality is today you can get into property as low as 2%. Now, whether that's a good decision or not and whether it actually suits you is a whole different ballgame. But I would go on to say that most people on average are buying investment properties with a 10 to 12% deposit. So straight away, you know that you're in the market a lot faster than those who don't have that knowledge. This is why you're here. You want to start scaling up your net worth, and a really effective way to do that is with real estate, but you need to buy well. So if you go, I live in Sydney and I want to buy a house that's going to cost me 1.5 million. Well, yeah, okay, sure, I don't need 20%, but I need 10%, and that's really hard. Well, that's why you need to look outside of Sydney. So you might go to different markets, regional centers, smaller capital cities, and you realize that maybe you can get a house for about $600,000. And I know this for a fact because we purchase property every single week. So before you jump into the comment section saying, where am I going to find a house for $500,000 in Australia? They are available. And no, they're not in mining towns, they're in really good areas that are going to present to you really good growth. In fact, I purchased a property myself only last week and it was $600,000 for a 4-bedroom place in an area that I expect to grow really well, not just in the next cycle, but long term as well. So this stuff is actually possible. So depending on how much you want to be spending in terms of purchase price, you can get in a purchase price of as low as about $400,000 is probably the minimum we're purchasing at the moment with. And so on 400K, your deposit's about 10%. You'll have all your other fees like your stamp duty, buyer's agency fee, your conveyancing fees, as well as some inspections. So in order to buy that, you're probably looking at anywhere between $80,000 and $90,000. And you might be in a position where you've got $100,000 right now and said, holy crap, like I was always under the assumption that I needed way more than that to get started. Now I know you might be thinking, well, I actually can't live in the property, I have to invest, which means I'm actually renting. It's a strategy called rent vesting. I still rent now and I pay a lot of money when it comes to rent, but I make a lot more from my investment portfolio. So what you've got to think about is using every dollar to the maximum capacity. It's not about emotions getting involved. It's about saying, okay, if I want to actually retire and I want the 1% life, I need to do things differently, put my emotions to the side for at least the next 5 years, buckle down because this is the time to do it. Next up is your strategy and why you actually want to do this. Having a couple of houses or having a couple of 100 houses, you've got to think about what that actually gives you. Now, I've been in a position where I could have gone heavier in terms of buying more property, more real estate, and have 50, 60 properties. Personally, I don't care for that. And they're definitely different to your goals. So if you have the intention to say, well, I actually only need to retire with $80,000, I will have a house that's going to be paid off, how do I get there in 50 years' time? Well, your actions to actually get to that point is going to be very different to someone who says, hey, I know that I want a dream house that's going to be worth $7 million. I also want a passive income of $1 million. They're most likely going to have different structures, more headaches because they're going to have an accounting nightmare because it'll be bought under different structures. And then number three is going to be the fact that they're going to have to outlay a lot more, which in most cases means they're working for a lot longer. So the key question you need to ask yourself is why? Why am I doing this? And don't be scared that you've just now committed to this one goal. This can be fluid and it needs to be. Your strategy will change over time. When I bought my first property 11 years ago at about 21 years of age, my strategy was very different to what it is today. So naturally, what you want is to go, I need to be fluid, but I also need to be super logical about this. Figure out why you want it, how quickly you want it, and that's going to get you onto the right path before you go ahead and purchase a property. Now, purchasing property is only possible if you get access to funds. So financing is a big part of this. And so that leads me onto my third point, which is your borrowing capacity. There is no point going onto realestate.com or Domain and saying, oh, look at this property for 700K. Oh, this one's 1.1. Oh, this one's 400K. It does not matter if you can't get finance. So before you jump into thinking about what house to buy or where to look at, you need to think about what you can actually afford. And so I would strongly suggest that you go out there, speak to a mortgage broker, because that's how you're going to accelerate this entire process. In Australia, we've hit a new record high when it comes to how many people are using mortgage brokers. It's now 75% of all purchases are being made through a mortgage broker. And there's good reason why. Because what most people were doing was they were going to the bank and saying, well, hey, this is the bank I bank with, so that's who I'm going to get the loan with. You realize there's so many lenders and so many other banks. So instead of you going out to each one of those, and chances are the policy will change by the time you get to your 30th one, you go to a mortgage broker. You outsource these things because it's actually free for you to use and they get paid by the bank. So for them, they really have no incentive to push you to one bank over the other. They just need to get you the best outcome for the goal that you're after. I would always urge you as well to keep in mind, it's not just about interest rates. You need to go beyond that. If you're still questioning, hey, how do I save 0.1% on my interest rate? This isn't for you. If you're trying to scale up a portfolio, you need to look at which lender is going to give me the best valuations, which lender is working best for my servicing so I can borrow the most, and which lender is going to give me the most flexibility when I need it. And chances are that lender is not going to give you the lowest interest rate. Now, we've got a brokerage partner that we use for 95% of all of our clients. If you want to get started with your borrowing capacity and understanding that over a quick call, I'm going to leave a link in the description box below so you can contact them directly. They sit in our office and boy, do we have a lot of fun discussing strategy. And finally, the number 4 and most important, to be honest, is your risk profile. You need to know how much risk are you willing to take. If you're someone that's really risk averse and you just want to have your own house and probably just passively invest into ETFs, that's okay because you're still doing something. But if that's the case, then this strategy is not for you. You're not really after a scalable portfolio. What you're after is, hey, I'm okay with retiring at 65 and I'll have a nest egg that might be worth some money and that way I can just rely on myself. And if you were to do that, especially if you start in your 20s and 30s, you'll retire really comfortably. However, there are some people watching, and it might be you, that you're thinking, I want more than that. I want to be able to retire in my 50s if I choose to. And if I do work till 60 because I love my job, I want to be able to retire filthy rich, not just comfortable. And so in that case, you need a scalable portfolio and you need to understand what risk are you willing to take. I've sat across the table from people who have $10 million in the bank and they say, well, okay, I want to take this comfortably and I'll buy one property every year. And then I've had other people who literally want to buy as many as they can, have an emergency fund of about 10 to 15K, and as soon as equity is available, they use that, repeat the process, come back to us. In 2024, we've had over 10 clients that have gone past their 5th and 6th properties. And it's so exciting to see that journey over only just a short period of time where they came to us starting, had nothing, to now get to a point where they're now making passive income. Their equity growth in their portfolios are well in excess of $200,000 to $300,000 every single year, and that too is tax-free. And this is why it's so important you get all of these things aligned before you jump into the new year. Now, you might be watching this in the early months of 2025, but just know people have watched this as soon as it came out because 1, they subscribed to the channel, which you should now, and 2, they're getting ahead of the curve. Most people are going to think about New Year's resolutions and goals probably halfway through Jan. And then you get into the swing of things and before you know it, it's March. But if you're the select few, you're going to get started in December. You'll also know that I want to partner up with certain people that are also thinking the same way. Are they the people that are just taking early Christmas breaks or going on Christmas parties and things like that? I advocate for a lot of fun, but to be honest, I prefer working on this. And I work on my machine, especially when things become quiet. So I look forward to the 2-week shutdown that we get because I get to do some real deep work. That's the time that I focus on my own personal planning when it comes to my own wealth and strategies for the following year. Now, if you do this well and you want to start from scratch and scale up that portfolio, if you're in a position to purchase in Q1 of 2025, I have high confidence that you would have enough equity in your property to be able to purchase again in Q4 of that same year. Now that means if you purchased for 500K in Q1 and you purchased again for 500K in a different location in Q4, you'd have about $1 million worth of assets if you started from zero. And that means that if you just conservatively had 5% growth in your first year, you'd make $50,000 in 2026. Now that's just based on 5%. We know the national average here in Australia is closer to about 7 or 8%. But let's just assume it was 5%. And if you did this for 20 years, you purchased just 2 properties next year, and you said, you know what, I'm not going to do anything else. So in 2025, you go out there, you build enough equity to be able to purchase your second property, and that's it. You call it quits, you go and invest into ETFs, maybe you buy some Bitcoin, chill somewhere, and go on holidays. That same $1 million worth of real estate in 20 years' time would be worth $2.65 million. That means you would generate $1.65 million over the following 20 years, and you had nothing else to do. That would average out to be about $80,000 every single year, tax-free. Again, because it's equity, you're not selling, you don't pay tax on that. The only time you pay tax on it is when you sell. And in this case, you probably aren't selling anyway. By that point, you're probably positive cash flow by about $30,000 or $40,000 as well, and that puts you in a really strong position to retire on your own terms. If you guys need a hand with any of this, I'll leave links in the description box below. Subscribe to the channel, go and watch the hundreds of other videos I've got here. And now if you're catching this during Christmas where it's a shutdown, boy, are you in for a treat. Go and binge watch all the videos, get started and book in calls today. I hope you guys have enjoyed this video. If you have, smash that subscribe button and I'll catch you guys in the next one. Thanks guys.